Welcome back to the Money Seed Podcast. Today, my guest is Mike Cavaggioni. Mike is the host of the Average Joe Finances podcast. He's a serial entrepreneur, he's a real estate investor, and he's a Navy vet. Mike, welcome to the show.
Hey, Gabe, thank you so much for having me on. Really appreciate it.
So, Mike, you are speaking to us today from Hawaii. You have a really cool story. Maybe give us a quick 5-minute version of how you ended up in Hawaii with a folded flag behind you, with 20 years of naval experience behind you. Tell us all about it.
Sure. I don't know if I can make this quick, but I'll try. Uh, and don't mind me if I blab too much. Just cut me off, man. I'm from New York, and sometimes I can't shut up. But yeah, so I did. I joined the Navy from Long Island, New York. That's where I'm from originally. And I wound up staying in for 20 years. Didn't think I was going to do 20 years, but I did. I thought for sure at the end of my first enlistment I was done, but I wound up staying. So I was enlisted for 9.5 years, and then I commissioned as an officer. Did my last almost 11 years as a commissioned officer, and then I punched out once I hit. I was just a little over 20 years, but I knew 20 was it for me, because for me, what I felt like was once I hit 20, I'm only working for half my money at this point. So I'm better off getting out, collecting my pension, and making more money. So that was my mentality behind it. And I'll tell you why my mentality kind of shifted that way. And it was towards the end of my career in the Navy. I realized, at my 16-year mark, 16, 17-year mark, like, hey, something's got to give here, because when I retire, what am I going to do? Because this is not going to be enough for me to live a sustainable life in Hawaii, definitely if I want to stay here. And it's not going to be enough pretty much for anywhere. So I said, I got to figure something out. So I started looking into real estate, because I had invested in real estate in the past by accident. I was an accidental landlord back in 2009 timeframe, because a property that I bought in 2007, well, we all know what happened, right? I couldn't sell it. So I wound up renting it out for a while at a loss, which really sucked. And it left a bad taste in my mouth for real estate. But I was able to bounce back from that. And a couple of years later, I started getting back into real estate in 2019. And I ran into a friend of mine who was previously on a ship with me. And we got together, we had a lunch, and I said, hey, look, I want to get back into real estate. My wife is apprehensive to it because of what happened, with the last time. I'm a little apprehensive, but I really feel like this is a good path to go down. And at the time, like, I think he had like 28 or 30 properties. And he's like, you know what, let's have lunch, bring her over. We'll sit down, like, show me some of the deals that you're looking at, and we'll kind of analyze them together. And I'll kind of give you some tips and stuff. I said, oh, that'd be great. So I started looking up some properties. And the funny part is, like, as I was doing it, my wife kind of got into it too. And then she found a really good deal, and I found a good deal. And we brought them both with us when we went to that lunch. And I started to notice she was getting a little excited about it, right? So we get to the lunch, and it didn't take much convincing. Like, after she took a look at their portfolio and like their numbers that they had on their spreadsheet, she's just like, huh, this might not be a bad thing. So we show him the two deals, and he said, oh yeah, both of these are good. Like, both the numbers work out really well. The only thing is, like, you have to go get the inspection. You have to see what it looks like on the inside, and make sure that it's going to be a good fit. So anyway, we wound up picking one of those duplexes, and we put an offer on it, got accepted, and we started the process and bought our first duplex. Now, this was in Chesapeake, Virginia. We're in Hawaii, so we're over 5,000 miles away. Very interesting stuff, right? Did everything sight unseen, had videos sent to me, pictures over the phone with my property manager / general contractor, who was the same person, which I recommend in the future. Like, that's something I won't ever do again. You definitely have to have the right team in place. So there was a lot of lessons learned in this first deal, right? But anyway, so we get this deal. We closed on it. Now, we started back in November of 2019. We closed on it in February of 2020. So what happened that very next month? Well, the world essentially ended, and we were like, oh crap, what do we do? I had a tenant that lost his job, couldn't pay rent anymore. And I'm like, what did I get myself into? Right. Anyway, even though I was a new investor, you know how real estate investors get when the going gets tough. You try to get creative, right? So I started doing some research, and I found a rental repayment program for that county. and I got my tenant enrolled in that, and they wound up paying me all the rent that he owed me, which was 6 months worth of back rent and all the late fees. So they back paid me everything, got
Nice.
him caught up, and he was good to go. So that was really awesome. Anyway, a year later, I was like, you know what? I started learning about multifamily real estate, and I said, while I was active duty in the Navy, I was like, I'm really busy. I don't have the time to sit here and go back and forth with this property, especially since it's 5,000 miles away. And we had a military travel ban. I couldn't fly, because of the pandemic. So I was like, I can't even get out there to go look at it and see what's going on. So we eventually we just sold it, and we sold it at a profit for about 15,000 more than what we paid for it a year earlier. And then we took some of the profit from that, and then I took some money out of my thrift savings plan because they had like this COVID relief thing going on. And I said, this money would be better off in real estate versus what it's sitting in with this thrift savings plan. So I pulled it out and I got into my first syndication, right? 102 units out of Roanoke, Virginia, with a team that I felt very comfortable with because I've been going to their meetups. I've been learning about multifamily from them, and I just felt very comfortable with these guys. So I got into my first syndication there, and then I went to go to the Real Estate Wealth Builders Conference in 2022. Actually, that's the shirt I'm wearing right now.
Oh, cool. Yeah.
They asked me to come be a speaker about networking in real estate, so that's what I did. And while I was there, I wound up closing on two more syndications within 2 weeks of each other. So I got into one of them at the end of RubeCon, and then 2 weeks later, I got into my next one. So it was like everything was happening pretty fast, and I was like, okay, this is pretty cool. But now what I loved about getting into the multifamily side is I was able to kind of not really do anything anymore and just collect these dividends and these checks every month and every quarter. And I'll even give you something even better. So the very first one I got into, my birthday was last month, June 2nd. And I got on my birthday a nice fat check from that first syndication because they did a cash out refinance and they repositioned the debt on the property. And I got a nice 21% return just like that. And I'm still getting paid my monthly dividends, and I still have my piece of that property. It was just because they were able to get out of such a big loan, and that debt service that they had was lowered. They were able to pay all the investors a healthy chunk of change. So that's why I got into multifamily. That was kind of like from the soup to nuts to why I got into multifamily. And I'm going to catch my breath and give it back to you.
Yeah, that's amazing. I always love stories about how quickly real estate investors can scale. So it sounds like you got into this duplex in 2020, right? February 2020. And here we are 3.5 years later, and you run over 100 doors and you run your own syndications, which is pretty wild that you had that kind of
So
occur
I
in
don't
3
run
years.
them. See, that's the beauty of it. I'm a limited partner.
Got it. Okay.
So I'm completely passive. So I am being a little bit more active now. I've actually been underwriting some deals with some other partners because I am looking to get into the general partner side.
Mhm.
So I've actually been underwriting a bunch of deals, and nothing's sticking right now because cap rates are ridiculous. So right now, like my goal is to, once I find something that sticks, is help raise capital and do investor relations, because that's what I'm good at, and that's the network that I have. I think I could bring a lot to the table there. So that's kind of where I'm currently at right now in real estate. So I've got those LP deals, which are great because I don't have to do anything with them, and I could focus now on being more active.
And what do you think is a good return for somebody who joins one of these syndications? I know you mentioned a really nice payday when you got this 20% return, but roughly speaking, what kind of returns do you expect?
Yeah. So right now, like the ones that I'm in, they're all between 8 and 12% annual, right? Where you make your money is at the end of the deal, the exit, right? And what you're going to see there is a significant return if you got into a good deal and things went well. I'll just give you some food for thought. With the first deal I got into, they bought the property at 6.6 million, right? When the cash out refinance happened, it got appraised, and it got appraised at 13 million. This was 20 months later.
Wow.
20 months later. Okay. It's already worth double what the purchase price was.
That's
And that is
insane.
because of the value add that the operators put into it. It was significant. So they had a really good system put into place for every time there was turnover, they weren't renewing leases and they were just renovating every single unit, right? They added a park, they added all these amenities to the property, and the value just shot through the roof. And that's one of the things about this particular team that I felt comfortable going to my first deal with them, because I saw their track record. I saw what they were already doing. I mean, the very first syndication they did, now mind you, they were still a newer group of GPs, but the very first syndication they did, they exited in 2 years for a 40% return. So it was significant. Yeah. So that's the kind of stuff you can expect at the end of a syndicate. The exit is, it's going to be over. Well, okay, I'm not going to say it will be anything, but it should be 20% or more that you're going to get on that back end. So normally if you go into syndication, your plan is to be in it for 5 years, you're likely going to double what you invested into it in that 5-year period. And then if you look over a 5-year period, if you double your money, that's a 20% return, right? So that's what makes it really good. And 20% is huge. I mean, if you could sit here and take $100,000 and 5 years later, it's now $200,000, you got a good thing going.
I agree with you fully. Yeah. And that's what I find with most syndications is that usually when you run the numbers, it ends up working out to like a 15% to 20% return. If you're lucky, you can get a little bit more than that. But I mean, it almost always beats the stock market, right? In the stock market, you're going to get 8% when you're stuck in a fund or something, maybe 9% in a good year kind of thing. But real estate will typically beat that hands down. And like I said about syndications, it's really good. It's passive. There's annual cash flows from the rents. And then when there's a big, whether it's an exit or whether it's a refi event, then you're going to get a nice check.
Yeah. And it's a beautiful thing. And like you said, it always, right now, it always beats the stock market, right? And the thing is, like, most syndicators are not going to go buy a deal that's not going to work out. And if they do, they do capital calls and there's other things, you will get a lower return if that has to happen. But that's why it's important. And I'll put this out there as well. If anybody out there that's looking to maybe invest passively in a real estate syndication, do your research on those operators, look at their track record, and then whatever deal that they're putting in front of you and they're sending you the slide deck, the slide decks always look phenomenal. You look at that and you're like, oh my God, I want in, right? Do your own research too. So you're going to see some of the data that they put in there. Go verify it. Go make sure that data speaks correctly. Go call some of the other property managers for other apartment buildings in that area and ask them, what's your vacancy like? What's the rent look like? Go look up what the average rent cost is for something similar. Like if it's a 2-bedroom, 1-bath room that's being rented out, go look up what that cost is. So if the apartment building that you're getting into has a bunch of 2 bedrooms, 1 bath, and a couple 3-bedroom, 2 baths, and 1 bedroom, 1 bath, look up what all those prices are, and make sure that you're in the right area. That the prices that for the property that you're getting come in lower than that, because what they do with the value add is they try to get it to that point. You want to get it to that market value. And a lot of times if it's low enough, they'll get it to like a little bit under the market value. So there's still meat on the bone to incentivize a buyer in the future, right? So that's another thing that's huge as well. So you want to look for the data, right? You want to look at the job industry, right? You want to look at, what kind of jobs are there, what's coming in, what kind of jobs are leaving, right? So a lot of the stuff that I'm involved in, like the one that's in Roanoke, Virginia, we got that one because it was right by JMU University, right? So there is always an influx of students. It's pretty much a student living area, right? Same thing with the one that I'm in with Monmouth, Oregon. It's literally right next to the university. Then the one that I'm in Texas is in an area where Amazon just built a brand new warehouse, right? A distribution center. Right. So things like that are huge. When you see that coming in, that means jobs are coming. That means people need a place to live. So that's the type of thing that you want to look into before you get into any deal.
And I think that's fantastic advice. And it sounds like you're trying to diversify yourself regionally and geographically. And you're right. I mean, check out the community where you're trying to invest. Make sure the community has good jobs, a good economic future, maybe population growth and projected population growth. And all these things will help drive your real estate returns. Another good advice I heard a while ago, if you are looking to get into syndications and you're trying to figure out which partner to go with, and there's a lot of different partners you can find, they're quite easy to find. I myself on this show, I've interviewed probably 8 of them, over the past year. And go check out their website. Most of them have a free book. Get that free book, check it out, and then just sign up to their newsletter. Most of them have a free newsletter, and just start getting that newsletter once every 2 weeks or once a month, and to see how do they communicate. Do you like how they communicate? Are they communicating frequently? What's their track record like? You mentioned that as well. How much experience they have? How do they communicate with their clients and their limited partners? And if you think you can trust someone to give them, say, $100,000 of your money or maybe more, then yeah, you have that knowledge and that experience to say, you know what, I've been following this individual for the past 6 months or 9 months. I feel comfortable putting my money there. And knock
Yeah,
on wood,
and
most of
you
them
can also
will
talk
work
to other
out. Yeah.
people. You can also talk to other people that have invested with that team in the past and say, hey, what's your experience been like with them?
Mhm.
Because once you start getting their newsletter, they'll invite you to webinars and different things that they're doing, presentations on properties. You're going to see the other people in the Zoom call. You can reach out to them, send a private message, be like, hey, after this is over, can I talk to you real quick? I have some questions about, like, or you just ask them like, hey, have you invested with these guys before? Yes, cool. Can we talk after this? I just have some questions about what that process looked like. I'm brand new to this, right? And you'll find that most people in the real estate investing community are very giving. So I don't think they're going to say, no, figure it out yourself. They'll say, no, I could talk to you about this, about, how I got into it and whatever. Like, I know for me, like, if anybody ever reached out to me and said, hey, Mike, I'm thinking about investing with this team that you've invested with in a couple deals. Can you talk to me about them and share with me why you invested with them? Absolutely. I'll do that. Right. And that's one of the beautiful things about the real estate communities. I would say 97% of the people that I've met in the entire community itself are just genuinely fantastic, great people. They're about 3% are scumbags, and those are the people that you always hear about, right? And that give people in real estate and landlords a bad name. Unfortunately, that's the group that gets the most spotlight. But generally, I would say, most people that you're going to meet are just fantastic individuals.
Absolutely. And connect with them on LinkedIn and start following them on social media. And what I found is that many of them, they travel the same circles, right? So they go to the same conferences, they all know each other, and
Yep.
you'll see a
Yep.
photo and you're like, I know that guy, I know that guy, I know that guy. And it's like a really cool community. It's a very nice, friendly community. And yeah, get to know them, and then eventually you'll feel comfortable enough to invest with them.
Absolutely. I know probably every single investor on the island of Oahu, because I go to like every single one of the meetups out here. And then I know so many investors back on the mainland because I go to conferences, I go to different meetups like when I'm back on the mainland. And that's what I'm always doing. Like, I'm always networking. And if you're going to get into real estate, I'm telling you right now, building your network will help you out immensely when it comes to finding deals, when it comes to finding partners. It's just a thing of beauty when you go to a meetup and you can meet so many fantastic individuals. You just can't beat that.
Mike, one of the
You're
things,
not going to find that investing in the stock market.
oh, absolutely, 100%. Mike, one of the things I love about your story is that you went out there and you got your real estate license. What was the impetus behind you doing that?
It's funny because I wanted to tell myself I was doing it to learn more about real estate, to make myself a better investor. But what really happened is I did it as a side hustle, right? So I was still active duty in the Navy. I was going to a real estate meetup, and one of the guys I met there was a real estate agent. And, he started when he was on active duty, and he said, hey, Mike, why don't you go get your real estate license and be a referral agent? And you can make some more money on the side. Like, basically, if you know anybody, in the military that you're working with that's coming here or leaving that wants to buy or sell their house, you pass that info to another agent, and then you get 25% of their commission. I said, what? I was like, really? Like, that's a thing? He's like, yeah. He's like, that's how we do referrals. I said, okay. So I went and got my real estate license, and I started being a referral agent, and I started sending referrals to different agents on the brokerage that I was at. And then I started getting these checks, and I'm like, this is stupid. This is the easiest money I've ever made. I just got to give a name. Like, this is crazy. So that's what got me into getting my real estate license. Then when I got out of the Navy, I tried my hand at being a full-time realtor, but of course it was at the turn of the market, when I got out, and I'm like, what am I getting myself into here? So I actually, and I just shared this on a podcast that I was on yesterday. I've actually kind of shifted back to, I think I'm going to just be a referral agent again. Because for me, like, I make more money or there's more lucrative opportunities for me doing stuff outside of being an agent that I want to focus on. And I also have some businesses too, side businesses that I want to focus on that. And if I'm putting all my time into, hunting leads and trying to find, buyers and sellers, it takes too much away, too much of my time away. Because as a real estate agent, I want to be a good real estate agent too. So I don't want to sit here and be the guy that you call and it's always going to his voicemail saying, I'll get back to you. I don't want to be that guy. So I had to make a decision, like who am I going to be? Am I going to be Mike, the investor and businessman and entrepreneur? Or am I going to be Mike, the entrepreneur and real estate agent? So I was like, So I'm kind of going with I want to do my own thing, and grow my businesses, but I'll still keep my license on the side. And I'll still do transactions for like friends, family, or if it's somebody I know and they need help, like, hey, yeah, I will help you out and I'll give you everything that I got, right? I'll dedicate my time to this. But I can't sit here and take on 6 clients like I was doing before at once. It's too much of my time. So that was a decision I just made recently, actually this past month when I was at a mastermind. I made a decision to shut down one of my businesses and to kind of scale back on being a real estate agent, because it was with a simple question like, what is it that you really want to do, that somebody in the mastermind was asking, and then, what are you doing well at and what are you doing poorly at? Excuse me, like what are you going to give up and what are you going to pursue? And I'm just like, oh man, I had to like take a step back and look. And then I looked over at my vision board and said, yeah, we got to scrap this whole thing and start over. So I completely scrapped it halfway through the year, just took my vision board and just tore it down and said, I got to start over. So it was a very eye-opening experience, but that's another reason why I feel like networking is so important, because being in a mastermind like that was able to help me, kind of close something out that I was holding on to that wasn't really doing much for me. So having that encouragement from other fellow investors can really help you step it up and take it to the next level.
Yeah, and there are only so many hours in a day. And that's almost one of the hardest things, right? Is when you have like 5 different good ideas to pursue, but you only have time to pursue 3 of them, then you have to make that decision. Which 2 good ideas am I not going to pursue? And that's hard. That's really hard.
Yeah,
So
it's
Mike,
funny. I saw this meme last night that really made me chuckle. It was it's like normal people going to sleep and they're on their pillow and they shut their eyes and they go to sleep. And then it's like entrepreneurs going to sleep and it's like eyes wide open. It's like, did I answer that DM? Ooh, I have a good idea. Oh, did I call back so and so? Like it's just like this whole thing, and it's like, oh my God, that's me. I was like, this is why I can't sleep at night. Well, it's one of the reasons, but so it's just pretty funny when you see stuff like that that you can resonate with. But you know what, man, I love it. I really love the community, Gabe, and the people that I get to meet, like even being on your podcast, like this is so fun for me. It's a treat, even as a podcast host, to be a guest on another podcast and just share my story, and then get to network with somebody awesome like you. That's one of the things that we selfishly get to do as podcasters. It's the people that we get to meet because we have a show. So I'm going to say also to you, kudos to you and hats off for, taking your podcast as far. Like I know you're in the 70s, right? With your episodes, most people don't even get past episode 7. So the fact that you're keeping this going, and it's going to be very helpful to future real estate investors or even current investors that are looking for something different.
yeah, and I think having a podcast is a fantastic way to grow your network and to grow a business. Tell us about your podcast. I see the sign behind you, The Average Joe Finances. Tell us more about how you got it started and what it's about.
Yeah, so Average Joe Finances actually started off as a blog where I was sharing my own personal story of getting out of debt and moving to Hawaii. Because the way things started for me after that first property I told you about that I bought back in 2007, it actually left me in a lot of debt because I wound up having to short sell that property. I bought it for 250,000 back in 2007. I short sold it in 2012 for 157,000. So it really, really stung, and it left me in a pretty bad spot. Maxed out credit cards, just really bad. So I had to, figure things out. So my wife and I kind of came together. We had one income because She's a stay-at-home mom and homeschools the kids. So it's like, we got to figure out how to do this on one income. And we started following Dave Ramsey, right? We did the baby steps. I was like, I like steps 1 through 3. After that, I would think it's crazy. Like, I'm not going to save up enough money to just buy a house cash, because that's crazy. So we did steps 1 through 3, and then we also did the envelope method. We shifted that into our bank accounts, and we had multiple bank accounts that were envelopes, and we did it that way. And each time I got paid, it all got split up into these different envelopes, right? And that we used to pay all of our bills. You know, we had a vet account, we had a car account, we had, like car maintenance. We had the, home account that was for our rent and anything else. We had a fun money account. This was to do family fun activities, take the kids out. Because the thing is, like, when you're in a situation like that and you're grinding and you're on a budget, or you're on a spending plan, and you're trying to, get out of debt, if that's all you're doing, you're going to burn yourself out and you're going to quit. So I made it like a thing to make sure that we had money set to the side to still do activities, and not just focus on, okay, debt, 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 debt. And by doing it that way, we were able to stay committed and stick to it. So yeah, it was very tight, and our fund money budget was very small, but we made it work. And in a 2-year span, I paid off $40,000 in credit card debt and personal loans, and I also saved up $40,000 in our bank account, our savings account, for when we moved to Hawaii, to make sure that we had that money. Then we bought our home, and then I had money for renovations because I used my VA home loan, right? And then we were able to make our house our home, and it worked out really well. So I started I know, long story, right? So I started that blog to kind of share that. And then a buddy of mine who had started a podcast not too long before that reached out to me, and he said, "Hey, Mike," he's like, "I know you like to talk. You're from New York. Sometimes you can't shut up. I mean, that's something I get all the time." And he's like, "Why don't you start a podcast talking about this stuff?" He's like, "Podcasting is going to be huge. I'm telling you right now, it's going to be huge. It's already starting to blow up now." And this was in 2020. And I'm like, "Oh, I don't know, man. Like maybe when I get out of the Navy, because I just don't know if I have the time to do that right now. Like I'm focused on so many other things. Like now I'm getting into real estate investing. Like I want to focus on that." He's like, "Trust me, man. Trust me. Just start a podcast." I said, "All right, man, you twisted my arm a little bit. I'll start it." He's like, "Even if you can only do one a month." I said, "No, I'm going to do one a week, if that's what I'm going to do." So I started the podcast, started doing one episode a week. And I did everything the wrong way. I didn't have batch of episodes when I started. I was literally recording and like prepping an episode every week for that week. It was horrible. And after like my first 4 episodes, I started bringing on guests, and I didn't know how to interview people properly. So I built like this podcast script, and here's the questions I'm going to ask, and it's going to go in this order. And it was very robotic. It was very like not personal. And I was like, I hate this. Like, this is just did not feel good. Right. And even the first person that I had on my podcast, like I told myself, well, I know I have a set time limit. This is what I want to do, and it has to be over by this time. And literally like 20 minutes into talking to this guy, he's like, "Yeah, I'm excited. Let's talk about this." And I'm like, "Okay, well, that's it for the episode." Right. Like I just completely cut him off. I'm like, what am I doing? And, if you go and listen to my first couple interviews compared to today, it is night and day. I got into a groove and realized, hey, I need to treat this just like a conversation and start asking these people questions that I want to ask them, because it's things that I genuinely want to know. If it's something I genuinely want to know and it provides value to me, it'll provide value to someone else. And that's when I got into and just completely changed everything. And now what I do is my quote unquote script is just, the person's name, their bio, the topics we're going to talk about. And then I do have the only questions that I definitely ask is the first question. And that's like, "Hey, share your story with us." And then the last 4 questions I have, I call it the final round. It's the same 4 questions I ask everybody that comes on the show, but everything in between that is just a conversation. And I go based off of their story. And then I have this notebook over here. I take pages of notes as I'm talking to people, because if they say something that I want to come back to, I'll come back to it and we'll chat about it. I try not to interrupt people too much unless it's something I want to jump into right away because they said something like controversial or something crazy and I want to get into it. Right. But that's one of the things that I love about being a podcast host now is, and again, selfishly, I could ask the questions I want. I could learn what I want. I mean, I learned more about multifamily real estate from my own podcast than I did going to these seminars, because I started bringing on multifamily investors and we started diving deep and digging into it. Like, okay, so how do you find a deal? How do you run these numbers? What are your key performance indicators? How do you determine, A, B, C, and D? And by being able to ask these questions, and I'm taking these notes and I transcribe my episodes, I'm like, dude, I have like a book here that I can have that could just help so many people. And actually, eventually, I do want to turn my podcast into a book. I want to take the interviews that I've done and the transcriptions and of course, give everybody their credit, for being a participant. But I want to, eventually write a book about the guests that I've had on my show and the interesting things that I was able to learn from that. So long answer, I'm sorry. It's what I do. But it's just something that's just been a big passion of mine. And I absolutely love doing it, man. Like interviewing people and sharing their stories. It's just, to me, it's just so amazing.
Yeah, and my journey is very similar with podcasting, where at the beginning I didn't know what I was doing. So the first, 10, 20 episodes are like really hit and miss, and nowadays when I run into one of my friends and they tell me, oh, I just listened to episode 5 or episode 6, I'm just like, oh no, please tell me you didn't, because those were horrible.
Don't judge me.
It takes.
I really want to go back and re-record those previous episodes and then just like kind of sneak in there and just upload new audio. It's just, oh man, sometimes it's brutal.
Yeah, and one of the things I struggle with is sometimes I think, maybe I should just delete those episodes, like just like pretend they weren't there. But at the same time, it's like, why be ashamed of it? It's part of the learning process.
Yeah.
There's good information in there anyway, and it's part of what got me to where I am today. So I can't.
And it shows your growth, right? Somebody can listen to one of your episodes and say, oh, I'm going to go back and listen to all of Gabe's podcasts, and they go back to the beginning and they're like, whoa, he's come a long way, So and that's one of the things too, like that's why I won't take those episodes down, because when I've had people come up to me like at meetups and say, hey Mike, I just found your podcast, I'm just listening to the most recent episode, I'm going back to the beginning to start from the beginning, and I'm like, please don't you'll stop listening. And they're like, what? I was like, no, I'm just kidding. I was like, I'm just telling you right now, like my first couple 10, 15, maybe 20 episodes, they're kind of rough, and I didn't have a great mic at the time. And, the audio quality was off. And so I think like it was by episode 13, I didn't even have my mic turned on. So it was coming through my laptop. And here I was, like, I thought I muted myself and I'm coughing and all this is horrible. I'm like, oh my God. So like that one I might take down eventually. I don't know, but it was rough, man. It was pretty brutal. But the thing was, like, the content was so good for the person that I had on the show. And it was really hard to not upload it, because at the time too, I didn't have a lot of content. And, I didn't have that wiggle room where, like, if I interview some and it just goes entirely south, I could just scrap the episode, and just tell them, hey, look, your episode's not coming out. And I've had to do that a couple of times. I've had people come on, they start spouting out stuff about politics. I'm like, dude, this is not what this is about. So, if we can't stop this, like, this interview is going to stop, and sometimes they just can't help themselves. I'm like, oh, okay, we're just not going to air this one, so, but, I like to keep it within the realm of what keeps my audience engaged, right? I don't want to, put something out there that's going to turn people off and not want to listen anymore. If they want to listen to politics, they can go listen to a podcast about politics, right? I'm here to talk about, personal finances, investing, and building your wealth, right? And sometimes politics are involved in that. So I don't mind talking about different like laws that get passed and things like that, but I'm not going to sit here and bash any politicians or anything like that. Like, we're not doing that, So sometimes you gotta lay down the hammer and be like, look, guys, this isn't going to work out. But for the most part, I've been able to air almost every interview I've done, which has been great. And there's only one time where I forgot to hit the record button, and that was a horrible experience. And I had to go back to that person and say, hey, I know we just had this whole conversation, but let's do it. Let's do a round 2, because I forgot to hit record. And it's embarrassing, right? When that happens. But now I have like this system in place, like on that little podcast script I told you about, like one of the things that's on there, it says, hit the record button, like at the very top, hit the record button, then start. So I always remind myself, just in case, sometimes it takes like that small thing to happen one time for you to add something to your checklist that stays there permanently, you know?
Yeah, and my experiences are very similar. So I probably had 2 or 3 episodes where like I was not able to air it.
Yeah.
And most of the time it's because of some technical issue, right? I remember this one time the internet connection was really bad. And so when I actually looked at the recording, it was just really like choppy and the sound
Mm,
wasn't right and whatever. And so I had to apologize to the guest and say, look, man, I'm really sorry, but it's just the quality is not there. I can't publish it. And so, yeah, that kind of thing happens once in a while. And that's all part of the experience. And I think most guests understand, right? It's just part of the whole process. It's
yeah.
all good. So
Yeah.
Mike,
So
you mentioned that you're into other business opportunities other than just real estate. Can you talk to us about some of the business ideas that you have and what are you pursuing at the moment?
sure. So actually, one of them is as we're sitting here talking on a podcast, I do have a podcast editing agency, right? So we do like all podcast post production. So audio, video, we make audiograms, social media caption video. We even just added on now social media management, where we'll post all your stuff to your social media for you. And basically it makes it like a hands-off production. Like you record your content, give it to my team, they take care of it, and that's it. And this business came from a need, that I had for my own podcast, because about 6 months into doing it, I was getting extremely burned out. And I was like, I don't know if I could do this anymore. Like that, the long hours I was working, for the Navy, coming home and having to at least dedicate an hour every day to editing to make sure my episode can come out by that Sunday, uh, was pretty brutal, right? And it got to the point where I was like, I think I'm done, you know. And then around episode 25, like this is around my 6 month mark, uh, you know, I decided to try out an editing team, and hired some VAs and said, hey, this is what I'd like to do, and can you make this happen for me? And they, there was a couple bumps and bruises in there, but once we got it figured out and we had a really good rapport, I said, hey, I want you guys to edit my podcast full time. And they were like, okay, great. And then I said, hey, how about we do this for other podcasters as well? Because there's other podcasters out there probably having the same problem as me. And why don't we offer this as a service to other people? So we did. We put this team together, and it's called Edit Pods. And that's right now, this is one of my businesses that's really starting to scale. And it's funny because like I've kind of ignored the business for like 2 years. Like I had a couple clients, it was good, it cash flowed, it wasn't a big deal. I just didn't really mess with it. But now, ever since I added the social media aspect to it, there's been a lot of interest. And and then one of the things I added on too is, you could schedule a Zoom call with me and I'll answer any questions about it. I didn't have that on there before. And ever since then, now I got people booking calls with me. And after I sit here and explain to them how our process works, they're like, okay, I want to sign up. And like literally over the last 2 weeks, I had 12 people sign up on the website. And they're exploring the different packages right now, and figuring out which one works best for them. And we also do custom packages. So it's just that's been pretty fun for me, right? And then being the experience that I've had with training up my own team, and now my team is now helping other people, it's just been, for me, rewarding as well, because I look at some of these shows that we work on and I see how they're doing, like they're, the success that they're having, and I'm like, we help them do that. So for me, it's gratifying. There was another business I started out here in Hawaii locally, that kind of was a flop. And this is one of the ones that I was talking about where I completely scrapped my vision board. But I started an inflatable nightclub business,
Oh,
and
say that again.
basically it was
Inflatable nightclub.
inflatable nightclub business. Yeah, so you could rent the nightclub. We set it up in your yard, we blow it up, we put the lights, speakers, smoke machine, get it all good to go, and then you throw a party, right? And I thought it was going to be a hit out here in Hawaii, but now maybe I just didn't market it right, or maybe I just wasn't the right guy for it, because like my passion really wasn't in it. And I think that's one of the things too. Like I set it up, put it together, and said, okay, it'll work itself out. And I kind of just let it be, and it didn't work itself out. I think if I was a little more aggressive with it, I could have, maybe done some damage. But I had so many other things going on, I couldn't dedicate that much time to it, between the real estate, between my podcast editing business and my podcast, which I've also turned into a business because my podcast is monetized. But between all of those, I'm just like, I don't think I can put the time into it that I need to for this thing to grow and scale. So I actually am selling that business right now. Pretty much, actually, I'm selling it for under the cost of what I paid for all the materials. Because like all the lighting, all the like the DJ equipment and materials that I bought all that stuff off Sweetwater. So I bought like top shelf quality, like lighting and all this other stuff. So I spent a pretty penny on it. But I'm right now I'm about 40K in the hole for this business. And I'm like, you know what? Sometimes you just got to know when it's time to let go of something. And that was one of the things that my mastermind helped me figure out. And that's why I'm kind of walking away from it now. So it's tough when you have to embrace failure like that. Actually, I did a solo episode on my podcast talking about this because of how tough it is, because of how hard it was for me to, you know, actually take a step back and realize that this isn't working and I have to let it go. Just from my own personal growth, I have to let it go because it's something that's holding me down, you know. So there's that. Then I also do financial coaching. And I do that sparingly. I don't actively go out and seek clients. Usually it's somebody that found my podcast and they're like, hey, I'm interested in doing some coaching sessions with you. So I'll set up some coaching sessions with them. Basically, and these are folks that I'm helping like take from, hey, I don't know what to do. So I take them and I say, hey, look, first things first, let's get you out of debt. Right. And then we're going to go from there. And then you can figure it out. Now, I won't give them investment advice because I'm not a financial advisor. What I do is I say, hey, here's how you get out of debt. Here's how you save your money. And then you figure out what you want to do with that. Either go talk to a financial advisor, or if you want to talk about real estate, I can help you out with that too. But I'm not going to give you advice on that. But if you want to get into real estate, I can teach you about that as well. And what I did to get into real estate. So that's kind of how that process goes. And then of course, my real estate license, I have that. And I still, I'm doing the referral thing now as well. I also built up a network of realtors I think we're in all 50 states now. But basically you can go to my website, averagejoefinances.com/realtor, and you can sign up there and say like what area you're looking at, especially if you're looking for investments, right? Every agent that's in my network works with investors, right? So the thing is, I have it set up where you can go sign up. And once you're in there, I'll reach out to you and say, hey, where are you looking? What kind of stuff are you looking for? And then I'll get you connected with the agent in your area. And see, what the great thing is for me is that's a referral for me, right? And that's one of the things that I really love about that side business is, people can come from anywhere and be looking in any state, and I can get them connected with a good agent, right? And then I also ask for feedback too, like, hey, how was your experience with so and so? And if I get a bunch of reports on somebody that's been pretty poor, I remove them. Like they're not going to be part of the network anymore. And I think that's important as well too, because this is my name that goes out with this as well. Oh, this is the guy Mike recommended to me. They suck, So I do take that very seriously. So if somebody has a bad experience, I want to know about that as well. So that's kind of like the multiple hats that I wear and all the different things that I do. But like again, I really started to scale back on some other things to focus on what's actually working. And for me right now, I would say 80% of my focus is now in my podcast editing business. The other 20% gets divvied up amongst the rest. Well, actually 80% would be the podcast editing business and my podcast, right? Because my podcast is doing really well. People advertise on my show, so I get paid for that. I get sponsorships and things like that. So that's been really good. So the podcast pays for itself, which for me is more than what I wanted for it. So
that's excellent.
Yeah.
And what would you say that you learned in the Navy, or what did the Navy teach you that you apply every day?
I just look at, just the military in general, from the time I went through basic training up until I got out, discipline was always a very big thing, and persistence, right? There's been many times where you just feel like you want to give up, but then you get, somebody by your side that motivates you to push you and go harder, right? And that's one of the things that I've definitely taken from my time in the Navy is just the fact that, no matter what, like even after you leave, like even after you're gone, someone else is going to pick up the reins and pick up where you left off, right? So it's okay to give it everything you got. And then when it's time to be done, it's time to be done. It's okay to walk away when you need to, right? And that now sometimes it's hard to do that, like I just had with this business, right? but that's one of the things I learned, like somebody else will pick this up and run with it. But the other thing that I learned too, like I said before, is the discipline piece, that if you can really focus on what your goals are, stick to it and be disciplined, you're going to be successful, right? And that's one of the reasons why I was able to have a successful career in the Navy. I mean, I went from the lowest pay grade of E1 all the way up to E6 in 6.5 years. And then I commissioned as an officer in one of the hardest programs to get commissioned, the limited duty officer program, where they take enlisted sailors and commission them as officers. I mean, the year that I got selected in my particular designator, they selected 20 of us out of, I think, 487 applicants. So it is a very tough program to get into. But I really worked hard to get there, and it worked out, you know.
I just want to say, I love your background, right? For those watching on YouTube, you got a sign over there that says work hard. You got your podcast picture there, and you have this sign to your left. I love it. It says, "Good things come to those who hustle," which I think really embraces you and basically how you go about your businesses and your life in general. And I think that's fantastic. Congratulations, Mike, on all you've achieved. And thank you very much for your service.
Yeah, thanks, Gabe. I really appreciate that. And that sign, it's funny. I was on one of those Target trips with my wife, because she loves going to Target, as all wives do. And I saw this sign. I said, I need that, and that's going to be my backdrop, because that is perfect for me. So
it's awesome. Mike, as we move to wrap up this episode, where can people reach out to you to see your work and to follow you?
Yeah, so I have a bunch of websites because of all the different things I do. So I'm going to make it easy for everybody. I have everything consolidated on one website. It's my name. It's MikeCavaggioni.com, MikeCavaggioni, and that's .com. And I have a list of, when you go to that homepage, it has all the different websites. It has my podcast, it has my podcast editing business, it has my coaching, everything. You could just click on one of those buttons and go to wherever you want. I also have a button with all my links. So if you want to follow me on social media, all of those are there as well. So I don't have to go through it. But if you are looking for me, I'm pretty much on every platform as @Mike Cavaggioni.
Awesome. Mike, I really appreciate you taking the time out of your busy schedule to speak with us today. I really enjoyed the talk, and hope to connect with you again in the future.
Yeah, Gabe, this was a pleasure. I really hope we could stay in touch after this, especially as a fellow real estate investor. I'd love to add you to my network, but this was super fun, and I had a great time. Thank you so much for having me on.
Hey, thanks for joining us for another episode of the Money Seat Podcast. Please remember to click like and subscribe. It really helps spread the message to other investors, and it helps attract new viewers to the show. We appreciate your support. Thanks very much.